if you watch a lot of my videos, you already know how to spot an area of value on a trading day or on a trading session. And this video, I just want to cover something really, really quick in today's trading session. So before we go any further, I just want to remind you again, there are my candles here composed of multiple colors in the chart, but there are two colors of candles that we trade, and there are two which we use for entry, and then the rest is just we don't really consider it for anything. So the first thing we want to pay attention to, and I will talk about this in the next few seconds, is this white candle, and then the other one is this orange candle here. But the orange is only valid if we break below this gray line here, which is the opening range breakout, and we are also below the VWAP, or as well below the blue line here, which is the 50 period moving average. If the orange is below that, that's valid. However, we only focus on white if we are above all those lines. Okay, like in this situation. And one of those examples is right here. We do get that white candle right here. Um, Remember, we are above the gray line here. We are above both lines, the VWAP and the 50 period moving average. We did get a buy signal here. We did get a signal here for a call option. Okay, and that signal was followed by that strong white entry signal. Okay, and same story here. We did get a call signal here again for buying calls. We entered in our trade, and not every time that these signals will be true. Sometimes it will be false, but it's really easy to spot the false ones. But that is for a positively bullish morning or bullish first session of the day. Let's take a look at today's trade. Okay, on today's trade, I remember how the previous chart that I just showed you was yellow. Yellow means it's highly bullish. There is a strong liquidity in the market. There's a strong volatility. There's a strong pressure to push the market to the upside. Everything will be yellow. However, if things are not yellow, what happens? We get blue. And remember, we talked about that other entry for put option. We did get that if someone was trading this on a day before, we did get that signal right there. We did get that right there. Remember, we were already below the opening range breakout. We were below both lines. That was the day before. I don't know. It may be looking at this on a longer time frame will give us a clear picture. Yep, right there, right there. On a and there's a clear picture on a longer time frame, a little bit of a longer time frame. And let's put it a little bit, maybe at 15 minutes. Um, Actually, you do see that on a 15-minute chart, we did get this signal. This signal was given to us long time ago. It's like the prophecy. Okay, prophecy was said long time ago at the market opening yesterday. Not at the market opening. Actually, this was around 10 o'clock in the morning, or 9:30 at 9:30 in the morning, my time. Um, so that was what was happening. We got that signal yesterday, and however, we were above everything, but not there is this red line that came in. Where did it come from? I did not draw this line, by the way. This line automatically shows up normally. If I put this back to 10-minute chart, you will see that line is there, but on a 7-minute chart you will not see any line here. Where did it go? Okay, we'll talk about that in a second. That is, 10-minute chart, it's back there. Okay, that is a magic line which tells us that if we hit the 9 o'clock or 9 a.m. and we did not have a trending moment before 9 a.m., we might have a trending moment after 9 a.m., meaning that whichever side we break to at that time, whichever side we break to at that line, we are more likely to trail to that moment, to that direction. In this case, we broke to the downside of that line, which means that line becomes our gray line instead. Not We don't use the actual gray line after that, after this vertical um, gray gray marker. We don't use the bottom gray horizontal gray line. We use we get the vertical, and then we use the horizontal red line as our the trend determination. We break to the upside, we're looking for call opportunities. We break to the downside, we're looking for bullish opportunity. And to this in today's trade, we do see that once we actually got those signals multiple times, we got that signal yesterday, um, right after that, and then we got that signal towards the closing of the day, which was good for swinging. Okay, we did get that gapping down this morning, and that gapping down. Remember, we said we trade the white candle. We enter on a white candle, or we enter on on an orange candle. Remember, we got a white candle right here, but remember what we said again. The white candle is below everything, which is false. It's absolutely false. Somebody would say it's garbage. It's absolute garbage signal right there. That's false. And then again, on the other side, we did get that signal over there, which was our put entry. We buy put right here. We get a strong put entry. We buy that put right there, right away. Um, but actually not right away. We wait for that candle to first close, break and close. This almost did not break. The first candle almost broke, but the wick kind of held everything back. So the second candle broke. But because we are trading on a high energy candle setup, we would trade that first candle actually because it broke and closed below. I would assume if we let's take a look at things on a traditional chart. Yep, on a traditional chart, we do see that yes, that was a strong entry. We did have that first candle. Second candle came in strong. Third candle, and the rest followed. Now we're seeing a lot of dodges here, and our chart. I mean, our vertical line will be forming up in the next 2 minutes here. Okay, so keep an eye out for that. That vertical line will show up, and then the horizontal rate will also be printed. Once those prints up, we are expecting either the trend to continue in the same direction or to reverse at that point. So, um, meaning if you miss this whole trend, there might be a pullback which happens in that next 1 minute that begins right now. Okay, there might be some pullback beginning in 1 minute after that line is drawn. So we will keep an eye out for that. But yeah, that's pretty much what you need to in order to be successful in most of this trade or in some of these trades. And if you're wondering what my setup is, um, in here I have a few things. I have the opening range breakout. I have the um, view up here, which view up technically you can have that in every trading platform has it, and then the moving average every trading platform has it. Just set that to 50 period, and then have your view up standard view up is okay. And then the gray line there is something that you can draw. You just need to draw a line depending on the time frame that you're trading on. If you're trading on a 15-minute chart, you just need to draw a line on the opening opening price of the first candle and the closing price of the first candle. Okay, that first candle, draw a sandwich on that. Make that a sandwich. Okay, draw a line on the top, draw a line on the bottom, excluding the wick. That's just the way I do it, excluding the wick. Okay. All right, we get that. And as you can tell, guys, we are at 9 o'clock exactly. We are exactly 9 o'clock. This is the moment that we expect the magic to happen, meaning that this is the moment that we expect at least a little bit of a pullback in the market, or a little bit of a pullback from the current trend. But yeah, we'll just keep an eye out. That line should be printed out in a second here if we don't see it yet, which of course we don't see it. Shh. But yeah, so those are some of the setup that I have, and then this coloring of the chart here. This coloring of the chart. If you go to TradingView indicator session, you will see that there is something which is called the RSI bar by Glass. You're looking for something called RSI bar by Glass, and that RSI bar just really make things more clear. You put that RSI bar. There are a few settings that you would need to make. On that setup. For example, I don't use this RSI the way everybody uses the RSI. My RSI, I have it in such a way that um, I've it's the opposite of everything. Okay, instead of me trying to find areas of oversold and area of overbought, I am doing it the other way around. I'm doing it such a way that I am I'm only trading the areas which is being traded, areas which is being, where selling is happening, and also the area where buying is happening. I don't want the area where things are oversold or things are overbought. Okay, so I have it flipped the other way around. So if you take a look at my setup, actually not my setup. Okay, that's not what I wanted to show. If you take a look here, you see that RSI bar period is 2 right there. Period is 2. Oversold is 70. I mean, oversold is 30. Overbought is 70, which is standard. Okay, right there. Let's see. Up level is what they're calling it. Down level. Down level is just that and that. So that whole thing together, instead of having this length as 14, as everybody has it always, I have it the other way around. So that way around, I can have the candles painted in the way that gives me the areas of values that we talked about. Okay, so we are at that moment of areas of values, and that's what we really need. So yeah, pretty much it. You stay around and you will get some more of this. And if you actually want this setup on your chart, I believe I left a video. I recorded a video at one point about it. But if you haven't or if you missed it, just leave a comment in the description. I will reach back to you and give you a direction on how to make this setup on your do this setup on your chart so that you have the same thing that I'm looking at. And again, I tend to use Aikanashi because that just smooths out signals. I do have another thing that smooths out signal. That is called the Renko moving average, RMI, and triangular moving average, which is TMA. If I turn that on, you will see that according to TMA, the TMA really smoothed out signal in such a way that we did have everything below the TMA yesterday, and kind of right now we're about to hug the TMA, but we haven't hugged it yet. And the TMA is just kind of like a moving average, but it's just a lot more smoother. Okay, see here, as an example, you have the 50-period moving average here. You have the TMA over there. Everything crossed below the TMA, which means where things hugged and crossed to the other side of the TMA, you should feel free to take a trade right away, because the TMA and Heiken both smooth its signal in the same way, which makes things a lot more easier actually. And if you take a look at things here, you do see that everything is below the TMA, and for sure we did break to the downside of that opening range breakout, and that just kept things on that same side of the triangular moving average, and then um, so that whole thing kind of came along really well. So yeah, we crossed on the other side, and things just kept going up. Okay, so where the cross happens on a TMA, mostly things will stay positive on that direction for a little bit, at least for small pips. It should always, unless if you are consolidating within or within the opening range bracket like this, then you don't really have a lot of luck. So you just want to pay attention to where the candles breaks towards if you're using the opening range breakout. If there's a breakout, you want to make sure that things cross both of those breakout and the triangular moving average, and you should be golden right after that. And again, like we said, we just had that triangular moving average. If you're looking at this point here, right here, we did have that hugging that line, and with that in mind, we should see some pullback here in a second, which of course we talked about that pullback. If we take a look at a 10-minute chart, we should see that line, maybe not yet. Okay, now I'm starting to think. Well, actually, that line comes at 9:30, so never mind. Um, is it 9:30? It's supposed to be at 9, but yeah, I don't see it. I don't know why. But yeah, here is where the magic should be happening. We should be at least expecting that. And again, I said we trade the yellow candles. We see the yellow candles forming up for a bull trend. We don't know how strong it's going to be, but at least there's going to be something around that. Just that we don't see enough volatility at this point. Because if there was enough volatility, we would have at least already hit that red line, which is a triangular moving average. So I'm going to leave that as it is. Um, and oh, there, that's what I missed. That's what I missed to turn on. Okay, all right. With that in mind, yeah, let's just keep things as it is. Okay, let's keep things as it is, and we should be good. We should be golden. So on exactly on this chart, we do see that the red line is forming up, and then we do have the yellow candles is forming up, meaning that there should be that slight pullback, which we talked about earlier, and all that should come together really neatly, meaning that you could, I don't know if this is a strong support or a support and resistance level based on historical data. If we look far to the left, I actually don't see a lot, but yeah, we could just get a quick pip right here, meaning using this as a swing low, could scalp a little bit, just a tiny scalp a little bit over there. That should work. Okay, but knowing that we would not cross that moving average, I mean view up, we would not cross that view up. So we would pretty much oscillate around here. So on a day like this, there's quite a lot of things you can do. And if you look at the actual market itself, things are really pretty red. Um, you do see that SPX itself is down 85. I mean, yep, 85. Let's call it. SPY itself is down around $9 today, which means this was actually a really smooth trade. We do have this line being drawn twice, and we don't really want that. Um, so I'm gonna go ahead and turn off that one there. Okay, turn off that. So yeah, in any case, we do have that, and yeah, the market is just kind of really bad today. So it doesn't really matter what you're trading, but whichever thing you're trading, you should really, if you have a strategy, just stick with it. Like I use opening range breakout, use opening range breakout, sprinkle a few other indicators on it, which in this case I'm using um, um, that view up, and I'm also using 50 period moving average. So with all those together, we should see a fair movement here. So and also a fair return with good decision making. So just stick with those, and do a little bit of a learning here and there, and as time goes, you will see yourself transforming into the beast that you have been wanting to be. So with all that in mind, thank you for watching this video. If you liked it, if this helped you in any ways, understand what's going on, just leave a like, comment, share, subscribe, and all that. And check me out for more free content and more educational content on this channel. Um, and with that in mind, have a good moment, and good luck trading or happy trading. Bye.